We produce north of 60 million pounds of copper a year. That's the equivalent of what a mid-sized copper mine is producing. So you can see that our EBITDA for this year is $61 million. That's what we protect, that's what we care for, that's our significant commitment to the shareholders is the quarterly dividend. And that is the one where we're paying a yield of 7.5%.
All right, today we're having a chat with Aurora Davidson, the CEO of Amerigo Resources, which is a copper mining company that's doing things a bit differently. They're actually reprocessing the ore of an operational mine. Amerigo is operational, it is profitable, and they're currently paying a dividend of about 7.5% based on current prices. Potentially a very interesting way to play copper, the electrification of the world. That's what we're here to try to find out today. Thank you, Aurora, for joining the channel.
Thank you very much for having me here. I'm glad to be sharing our story with your audience.
All right, quite excited to get into that story. Perhaps you can shortly explain what the business case actually is for Amerigo Resources, because it's not as simple as just mining a resource.
Absolutely. Yeah, we are a different type of copper producer. In fact, I think that a very easy way of presenting ourselves is to say that we are a copper factory. We're not a mine. We don't own mineral rights. We don't have a production facility where we are extracting ore and producing a copper concentrate. What we do 100% is produce copper, and we produce a copper concentrate exclusively from reprocessing the tailings of another miner. In our case, we're fortunate enough to be working with the world's largest underground copper mine, Codelco's El Teniente mine, as the mine from which we are getting those tailings. So just to give you an idea, because this may sound like, okay, it's a marginal operation, an artisanal operation, we produce north of 60 million pounds of copper a year. That's the equivalent of what a mid-sized copper mine is producing. And we're producing exclusively from treating those tailings and recovering additional copper. We also recover molybdenum as a byproduct. But that is the gist of the business model. Work with someone else's waste material. The tailings are the end material that comes out of the mining process, and recover additional value from that. Now, in the process of doing that, we obviously don't have a lot of the mining risks and a lot of the mining costs associated with a traditional mine production. You can imagine that we don't have to use drilling, we don't have to blast the material, we don't have to transport it, we don't have to crush it. Essentially, our operation is a copper concentrator working with waste material. So our costs are initially or essentially grinding, flotation, drying. So we are just almost the industrial end of what would be a normal sulfides copper operation. That's what you will find at our operation at MVC. Now, given the fact that we don't have to do all that prior work to get the material, and we're getting the tailings from someone else, we have to pay them a royalty. So our business model includes paying that royalty to El Teniente for letting us work with their tailings, which we then return to them. So we are not acquiring those tailings, extracting the additional copper, and then keeping the tailings. We're basically just a bypass operation from the mine into the tailings deposit. The tailings just divert into our plant. We recover additional material. We generate economic value. We pay a royalty. We generate a profit. And then the tailings are essentially returned to the owners of those tailings. So it's a very simple model. Really, you can explain it with in 5 minutes. I think I already used 4 of those minutes.
Yeah, definitely. Super interesting business model and truly unique in the mining space. At least I found this reprocessing is done, but the way your guys doing it with the royalty attached, quite interesting. Perhaps you can share some of the figures that are associated with this process. What kind of grades are you getting? Is it in the 0.5% range? Is it in the percentage range? And then copper is of course currently trading for about $4.50. What kind of margins are you able to achieve?
We actually have 2 different sources of tailings. We work with the current production from the mine. We call that the fresh tailings. So the mine is producing 24/7, 365. We get that flow of tailings, and that material has a grade of around 0.18% copper. But we also have the rights with El Teniente to process their historical tailings deposits. These were tailings that were deposited decades ago, up to 1986, in a tailings deposit that is adjacent to our plant. Those tailings obviously contain a slightly higher grade because operations were not as efficient decades ago as they are now. So those tailings have a grade of around 0.25% copper. So we are essentially working, as you can see from the numbers I just gave you, with very low grade. And people ask, well, how can you make money working with material that has such a low grade? The other side of the equation is the throughput. We are working with huge amounts of tailings. Our plant has a capacity to treat 185 tons per day. On average, we process around 170,000 tons per day, and that's a very high volume operation. So the counterpart of the lower grade is a high volume. We're essentially obviously a marginal business, and so for us, controlling our cost is of utter significance, because we're not in the process or in the business of producing copper. We're in the business of producing copper and financial margin. So just with the same diligence and with the same planning and controls that we produce our mining plan, we produce our financial budget and we control our costs. You were asking about financial data. Just to give you an example, I always like to refer to our latest quarterly information because it's basically the latest set of data that we have. In Q1 of 2024, so the quarter March that ended on March 31st, our cash cost was $1.89 per pound. Cash cost is essentially a figure that's key to understanding a mining business because it represents the cost of producing your material, but it also includes if you have byproducts, in our case the moly, it also factors in there the benefit of having that additional revenue from a material that's not your primary metal. So a cash cost of $1.89 against the backdrop of the copper prices that we're seeing is obviously a very good metric. Now, if everything stopped the cash cost, it would be fantastic, but it doesn't. As I mentioned to you, we pay a royalty to El Teniente, and so that royalty has to be factored in. So we get from the cash cost, we add the royalty and we add depreciation, just because, you know, depreciation has to be accounted for. You've already made the investment, etc. So we get to a total cost of $3.36. Of that, around 36 cents are depreciation, and the royalty, and we can discuss it later on in our conversation, the royalty last quarter was $1.11 per pound. So now you're at a cash cost, a total cost of $3.36. And then if you ask me what is your all-inclusive sustaining cost, we just add sustaining capex. Most of our capex is sustaining by definition, and we can also discuss that why in a moment. 6 cents per pound, and G&A for the head office, it's 8 cents per pound. So we get to $3.50. So your all-inclusive sustaining cost last quarter, $3.50. As you mentioned, copper prices are $4.60 today. So we are essentially producing copper, producing a margin, and producing free cash flow for our shareholders.
Amazing overview. Thank you, Aurora. I think that's very clear on the cost side. And of course, that royalty, we'll talk a bit more about the partnership that you have with that operational mine. That royalty is, of course, a variable expense, right? If the price of copper drops, you'll pay less royalty, and so your cost will also drop. Is that correct?
It is correct. And that is a key element of why our relationship with El Teniente has been so successful, right? Because in a way, that sliding scale of the royalty to copper prices protects our business when copper prices are low. And, you know, copper is a cyclical metal. You go through the highs and downs of copper prices. And this operation that we have has been operating, producing copper uninterruptedly for 32 years, regardless of changes in copper price. And part of that is that royalty structure, where we pay a significantly lower royalty when copper prices are depressed, and the opposite occurs. So it is a win-win situation for both the purveyor of the tailings, El Teniente, and for ourselves.
All right, makes complete sense. And maybe we should dive into that partnership. What is kind of the track record? How long have you guys been doing this together, and how long has that mine been operational?
I hope you like history here, because there's a lot of history around. Let me just start with the mine, just to give you the context, and so that your listeners can understand what we're talking about here. El Teniente is one of the greatest copper porphyries in the world. It began operations in 1905. 1905. So, 120 years of operations is their track record. What is their life of mine? They are currently undergoing multi-billion-dollar investments to continue having a strong production profile that will take their life of mine to an estimated term of 2082. So there's still a lot of life ahead for El Teniente, and through that life of mine, they will be producing tailings. Now, our contract is held by our operational subsidiary in Chile. It's an entity called Minera Valle Central. And Minera Valle Central entered into its first contract with El Teniente 32 years ago, in 1992. Amerigo bought MVC, Minera Valle Central, in 2003, and we have continued evolving that relationship with El Teniente by doing two things: extending the terms of our contract. Our contract initially had a termination date of 2021. We extended it to 2037, and we have also incorporated the processing of the historical tailings into that contractual agreement. So before it was just the fresh, now it's the historical and the fresh, with an extended term. It's a long-term contract. It doesn't mean that it will end in 2037. It just means that we will have to continue reviewing the date of that agreement as a termination date is closer to us, which is still not the case. So it is a significant deposit. It is, if you want to make a simplified conclusion, that it's almost an indefinite source of material for us. It is, to the extent that you're interested in seeing our production go into 2082.
All right, makes complete sense. Clear visibility on that, on the next 15 years, basically, of production, and then pretty clear visibility as well on that long-term 60 years life of mine from now on. And of course, you've already started hinting at it. You're also processing molybdenum, not just copper, but also that material. Perhaps you can quickly explain what is that material for the retail investor at home?
Yeah, moly is essentially a material that is present in the type of ore that we get from El Teniente. El Teniente produces molybdenum, produces silver, produces copper, but of course copper is a significant the most significant metal. Moly is used industrially as an alloy. It's also used in the chemical industry. It's used for electronic and electric applications. So it is a metal that can have a price that varies significantly from time to time. We've never stopped producing copper at MVC for economic reasons. We have stopped producing molybdenum when the moly price went below $7, and it was just not cost effective for us to do it. But just to give you an example of moly prices, last year, the first quarter of 2023, moly prices surged to around $31 per pound. That is significantly higher than what we have now, which is around, right now it's around $24 per pound. But remember when we talked about our cash cost, I told you that miners, we don't like to follow financial statement logic, so we just say, okay, just give me the cash cost and deduct from that cash cost the benefit that I get from my byproduct, right? So you get a credit to your cash cost. So in Q1 of last year, 2023, with moly prices at $31 per pound, we had a cash cost credit of almost 50 cents per pound from the moly. This last quarter, when moly prices were lower at around $20, we had a cash cost credit of around 34 cents per pound for moly. So moly has the potential of being a very nice adjuvant to the business. It doesn't make or break your business, but it's a fantastic thing to have when moly prices are even at current levels. They pay for all of our other direct costs through that credit equivalent of what we get for selling that moly. And we don't have to produce a lot of moly. For this year, for example, our guidance for copper production is 62.4 million pounds of copper, and it's 1.2 million pounds of moly. So at $31 per pound, you don't have to be a huge producer to get great benefits to your business from having moly as a byproduct.
All right. And then I guess a follow-up question on that is, how does that cash cost credit affect your royalty? Does the moly production also affect your copper royalty?
We have 3 different types of royalties that we pay to El Teniente. We pay them a royalty on the fresh tailings, on the copper produced from the fresh tailings, a royalty on the copper produced from the historical tailings, and we pay them a royalty on the moly production. So they get, rightfully so, I should say, a benefit from the 3 metals that we can recover from their tailings.
All right, makes complete sense. Thank you for explaining the use cases of moly and also how that affects your business case. Very interesting. Perhaps we should dive a bit deeper into the financials of your business. Of course, you're currently paying that dividend, roughly 7.5%. Compared to the current share price. Perhaps you can highlight what is the free cash flow generation currently looking like for Amerigo, and what should we expect on the short to medium term?
That is perhaps the most important question that we get from shareholders. So we created on our website, and maybe you could include that in your video as well, a chart that shows exactly what our cash flow generation is. So you can see there, this is our guidance for 2024, and we wanted to highlight 2 critical financial metrics for us. One of them is EBITDA, the other one is free cash flow to equity. If you were to ask me what is the real measure of how you're monitoring the success of the business, it's the free cash flow to equity. Right now, we are the closest of those prices that we're at is $4.50. So you can see that our EBITDA for this year is $61 million, and we're going to be targeted to generate free cash flow to equity of $22.3 million. So this is a business that can produce a significant amount of free cash flow to equity for 2 reasons. One of them, the exposure to copper prices as they rise and start to generate a margin is huge for us. But also, we are not a capital-intensive organization. We've already invested the money that we needed to invest at Amerigo to have the production levels that we have, and we're in a situation where we essentially are at the maximum amount that we can produce. Given that we're not your typical miner that has to reinvest hundreds of thousands or millions of dollars a year into your business to continue having the material to continue operations. We are relying on the tailings from El Teniente. We have invested substantial amounts of money to have the plant at maximum capacity. So we're just spending around $10 million of sustaining capex a year, and the rest can be allocated as free cash flow to equity. One other caveat, when we talk about free cash flow to equity, we've already taken out of here our debt repayments. We incurred $100 million of debt 10 years ago to expand our plant capacity without dilution to shareholders. We're going to be down to around $11 million of debt at the end of this year, and we're going to be debt-free at the end of 2025. So those figures that we provide of free cash flow to equity are after debt repayments. This after capex. This is essentially the money that can be dividend out to shareholders or returned via other mechanisms that we can discuss in a moment. It's all free cash flow to the owners of a company.
All right, and how does that figure, that 22 million in free cash flow to equity, that's roughly compared to your current market cap of $193 million US at this moment in time, That's roughly 11% free cash flow yield. Should investors also expect that as a yield through dividends, share buybacks, other measures? Or what is your policy regarding paying out to shareholders?
Look, 3 years ago, we launched a comprehensive capital return policy that has 3 different elements. And we wanted to create a thorough and well-built return of capital policy that would allow us to travel quarter on quarter through the changes in copper price, because changes in copper price can occur from one quarter to another. So it was important for us to have something that would work irrespective of where copper prices were from one quarter to the next. So we have 3 elements in our capital return policy. We have a quarterly dividend, that is the baby. That's what we protect, that's what we care for, that's our significant commitment to the shareholders is the quarterly dividend. And that is the one where we're paying a yield of 7.5%. It's currently set at 3 cents Canadian per share per quarter. And it is a dividend that we pay every quarter following the release of financial results. We announce the continuation of the dividend, and we pay it every 20th of the next quarter. So next dividend payment date, June the 20th, which is tomorrow. In addition to that, given the fact that the business generates so much more cash when copper prices are strong, we have 2 other mechanisms, and we call them additional distributions. We have share buybacks, and we have what we call a performance dividend. It's a special dividend to reward shareholders on copper prices. We haven't yet paid our first performance dividend because we have been focused up to this moment in share buybacks. It made a lot of sense for us to buy back our shares in the market at the prices at which we did, especially when we first initiated the share buyback programs. And we have retired more than 11% of the issued and outstanding through the share buybacks since we started this capital return policy. So it's a combination of the 3 elements, of the 3 tools, let's call them that. And just to give you some data, when we're talking about how we have structured this return of capital policy over the last years, we're not even 3 years into this return of capital policy. We have paid a total of $64 million back to shareholders. Of that, 24 million have been buybacks. So 37% of the cash has been allocated to buybacks, and 41 million have been allocated to the quarterly dividends. So we have paid currently 11 consecutive quarterly dividends, and your cumulative dividend, if you had joined us before we paid the first dividend, would be Canadian $32 per share, which is a fantastic return on your investment.
All right, definitely. That's an amazing track record for such a short time period. Highly interesting for any investor or even speculator in that matter. I would love to discuss your views on share buybacks. Mm-hmm. Of course, you've done them in the past, and now Amerigo looks like a genius because the share price is up. What is your view on when you should do share buybacks as a management team?
It is a very easy story to tell because share buybacks can be initiated when we have extra cash. We like to keep $25 million of cash in the bank at all times for operations and to ensure that our next quarterly dividends are covered. But when we go over the $25 million, then that's almost like the bell has rung, and now we have to think, what do we do? Do we do a performance dividend or do we do buybacks? And the decision, it's not as if we have a magic number that we say if the share price is at this or that, we will initiate immediately the share buyback program, because there is a very strong correlation between copper price performance, cash generation, and our share price. So in other words, when the conditions are good for us and cash is building up and we need to do something else with it, our share price also tends to go up. So you have to stop and think and say, well, is this the right time to do it? Is it not the right time to do it? So far, up to this moment, whenever there has been that additional surplus cash to distribute to shareholders, the decision has been it makes sense to go and buy back our shares. They're still cheap. We can do that. But it is something that is looked at in real time when the board sees, well, this is the cash that we have. This is our outlook on copper prices. How are our operations doing? Is everything looking good? Okay, what's the share price? Does it still make sense to buy them or not? So I cannot commit and say, if it's below $1.60 Canadian or not, we're not going to buy, or we're going to buy, etc., because it depends a lot on other factors. We haven't declared yet our first performance dividend, so we still have to test the market and see how people react to that. When you're buying back shares, the logical aspect of it is you have a bigger pie to distribute amongst the people that remain with the company. That makes a lot of sense. You're not creating a taxable event, but there are a lot of other things that have to be considered when making the decision. So I think that we're not rushing into that. We have the mechanisms. We know that it's either the performance dividend, the buyback, or a combination of both. If conditions were such that both of them could be done concurrently, well, who knows? We could be having the three types of payment on a given moment: the regular dividend, the performance dividend, and the share buybacks.
Very comprehensive overview of the three tools that you have, that main dividend, performance dividend, and share buybacks. Thank you for your thoughts and views on that. And then I guess the last question I want to squeeze into this interview before I let you go is, what are you excited about in 2024 for Amerigo Resources?
What excites me about the company is the operational performance. I think that that's where I put most of my time and interest. We are a company that is performing really well in terms of operational consistency, in terms of delivering what we said we're going to be delivering. We take a lot of pride and we take a lot of ownership in saying if we have set such a production level and such a cash cost and such a commitment to capex, we want to keep as close to that as possible. We are a conservative bunch of people at the operation. We look at potential risk. We try to mitigate risk. We have done a lot of our recent investments in sustaining capex have been also risk mitigation investments. So I'm excited to continue delivering on a very consistent operation. And if you layer on top of that our views on copper prices and how copper prices are still far away from where they need to be to create the incentive mechanism, the incentive pricing scenario that will generate additional copper supply. We're very excited about that dual combination of a mature organization that has a great track record, that is working with the world's largest copper organization. We're getting their tailings, and it's a phenomenal way of producing copper without creating additional environmental footprint, and under very strong and promising market conditions. So 2024 bears well for Amerigo, and I'm excited to continue delivering on that and ensuring that shareholders continue to grow their return on invested capital on the company.
Right. That's definitely exciting future ahead there. Just a quick disclaimer for the viewers at home. At the time of releasing this video, I don't own any shares in Amerigo Resources, although I am getting quite enthusiastic about it, so I'm not sure how long that will last. Aurora, I really want to thank you for your generosity with your time and knowledge and expertise. It's really appreciated.
Thank you so much. No, this was a good conversation. Glad to have another avenue of letting people know about Amerigo.